Have you got some money that you're looking to save for the future? Or maybe you're looking to invest in something that will give you a good return. There are a lot of options out there, and it can be tough to decide what to do with your money. But one thing is for sure, with rising inflation, your money will continue to lose its worth unless you invest it in something that will go up in value. Well, you're probably wondering what your best option is. Cash, gold, or cryptocurrency. We'll tell you the pros and cons of each one of these investment options so that you can make the best investment decision for yourself. Let's start with cash. Cash is the most liquid investment, which means it's easy to convert into other assets or use for day-to-day expenses. It's easy to access, and you don't have to worry about getting stuck with it for long if you need to exchange it for something else. It's also relatively stable, especially if you're holding onto US dollars. In the past, cash has been a safe haven for many people. However, there are some serious drawbacks to holding too much cash in 2023. One reason is that the cash doesn't earn interest, so you're not making any money off of it when it's sitting idle. Additionally, with inflation, the purchasing power of cash has already started to decline at a worrying rate. Do you know that according to U.S. Labor Department data, the annual inflation rate in the United States in 2022 was 7.7%? And if this trend continues, your cash will be worth less and less each year. So, what about gold? Gold is often seen as a safe haven asset and has been used as a currency for thousands of years. Gold is scarce, and it's not easy to produce, which means it's unlikely to be affected by inflation. Gold is also very durable, so it can be stored and passed down for generations. But in the last quarter of 2022, gold was worth almost 7% less as compared to its value in the last quarter of 2021. To explain this price drop, we need to understand that gold is generally driven by four key drivers: economic expansion, risk and uncertainty, opportunity cost, and momentum. Without going into the details, you should know that gold could not sustain its upward momentum in 2022. Its price skyrocketed in the first quarter and made many people rich. But after that, for the next 3 quarters, it came down significantly. This doesn't necessarily mean that gold is a bad investment. Gold still has a lot of value, and it's still an excellent way to protect your wealth. Especially if you're in it for the long term, but for those of you looking to make a quick buck, gold might not be the best option right now. And finally, let's talk about cryptocurrency. We know that cryptocurrencies have been on a roller coaster ride over the last 2 years. But despite that, cryptocurrencies have made a lot of people very rich. And trust us, many people are still bullish about the future of crypto. Do you want to know why? The biggest reason for this is that the total supply of Bitcoin is limited to 21 million, and almost 20 million of those have already been mined. So, once this limit is reached, no more Bitcoins can be created. The limited or no supply will eventually lead to an increase in demand, and this is what may drive the price up. So, which one should you invest in? Well, it depends on your goals and risk tolerance. If you're looking to make a quick buck, then crypto is your best bet. But if you're looking to invest for the long term, then gold might be a better option. Of course, you could also invest in both. But whichever asset you choose to invest in, make sure you do your research and understand the risks before putting your hard-earned money on the line. What do you think about our list? Did we miss anything? Let us know in the comments below. And don't forget to subscribe to our channel for more useful money tips.